guys and gals, we have a defense leg formed. Do you see the defense leg? And it came in the right time of day as well. Criteria, greater than 1,000. First criteria. So if I fan this out, about 1,700. We got another one over here to the left, so I need to go mark that one as well. But that's why I like to keep this nice and shrunk down there so that when they spike, it's easy. It stands out for me to see it. Both of them, same place. So that slick leg right there, another spot. We got double defense. Wow, look at them stacked on top of each other. We got 2 defense legs in this area. So we come back into this area. I'm buying. Okay? In this area, we're rolling with it. This would be here basically all day. I'm going to save workspace because even if a workspace crashes, I want it to come back with all of this good stuff. King timing with the Dr. Seuss on the continuation, defense leg back behind. So we come into this area, basically all green plays inside of here. I'm going to be looking to play. Yes, correct, Pablo. The delta over 1,000 now appears in red with this cancel the above, 100%. So with that, we need to also draw. So where are they going to? First defense leg up there. Okay.
Fib.NQ on the board.
So they bought here. We need the pivot. Yeah, so it's here. This pivot right here. Here's the identified pivot right here. So I'm measuring from here into my defense leg to see where they want to run this. So I'm going to use my F8 tool, the fib tool there, and I'm going to go through the defense leg into that 13. So gold line target up above us right here. So before they're going to take their profits, got to get over that little gold line right there. And so I'm going to draw another little zone right there. It's going to be their take profit zone. Distance from these to there. Yeah, it'll be 173 ticks just to the top of it. Their favorite is to run it down here, fake it. We're going to look for bear traps inside of this zone for the best plays, the absolute best plays. Now, if we get deep down in here, would love it. Love to see any of these lines hit here. And now from here up into that take profit, that's 220 some odd tick potentials. Let's talk about why I call it a defense leg. So let's got a couple of examples here. So to this one, let's zoom in. So now this is all spread out here because I'm looking for 1,000 or more, or really, really close. Like it's got to be real close. Like can't just be 800. It's got to be like over 800. It's got to be like 850, 9 to 950. Basically, the magic number is 1,000. It's got to be through a nice straight leg scenario, and you can just see it, right? Just super smooth, boom, and we got the 1,000 criteria. That's part 1. But let me talk about the why, because you want to know like why it works, how it works. Criteria 1. So we need that 1,000 leg. The idea is the big guys, these are the big guys, and we want to detect, and I'm going to use the green example to the long side first. You see a big spike down there on the delta flagging. You look over to the right and it says, let's do 1K there, 1K. This comes across that leg, and down on the delta flagging, I'm looking for the beginning and the end of that, which is going to be marked right here and right here. Now, this is where you might get a little lost on this. This is traversing time and space. We're going across the time axis. Okay? Across the x-axis right here on time. Now, again, time in our area, we don't have time on our bars. So it's bar counts. So the number of bars across from here to here, this is coming in on the delta flagging. I want to project upwards from this, from here and from here. I'm looking straight up on my actual bar chart above the delta flagging area. I want to mark the space from the beginning and ending of that. And all the bars in between, this becomes the defense leg. That defense leg area, now from left to right, across that time, now I'm looking for the price window. And the price window, I'm going to mark like this. All right, so I'm going to mark that region red or green depending on the color of the delta flagging. So in this case, we are doing a green here today because we basically saw massive. The first one was 1,000. The second was 1,500. That is now going to become my what I call the defense leg. They're going to defend that zone. Now, who's going to defend it? Well, the big guys who bought all of that, we don't expect that they want to lose money. The whole theory is they're not going to lose money. The big guys are like, we don't lose money. We push the market where we want, when we want to. Now, they've collected that check, right? They have collected. Now, normally that's by running stops. They've caught people off sides and they'll run it and they'll push it, and they've got a bunch of people off sides and they've collected their check. Now, they'll still fake them out. They want to get more. Now, because once they have collected their check of 1,000, they've got 1,000 to work with. Well, now they need another maybe 1,000 to go run this. They need more contracts to collect it. So what they'll do is they will dip into that zone. So let's say that this zone is now green and price has been coming around. When it comes back down into it and it gets everybody thinking, oh, we're going short. The idea is they're going to defend this. They're not going to let them push through. Now, again, they will. There are some that push through. It happened yesterday. Push through. But ultimately, they're going to run this thing up and they're going to move it into a double move. They want to double where it costs them. It costs them X number of dollars and they need to, quote, air quotes here, they want to guarantee themselves a win. Well, these are the guys who move the market. So they want to move this market up above their price and they want to move it far enough to where it makes sense for them to be able to take their profits up above with some space. Remember, they can't pinpoint entry and exit like we can. They need zones of space because of how many contracts they're going to be running. So what we expect is we want a double move out of that zone. So that's why I picked that pivot earlier. So once we've marked up the zone, then I want to find the prior pivot that came up to it. If we have come up like this, up into this area, and the primary pivot is going to be the one that was right in front of this zone. So in this case, this one's pretty obvious. I'm going to choose this as the pivot. So now what I want to do is use my F8 tool, and I want to measure from that pivot to the middle of that zone or to the top of the zone. Up to you, depending on how risky you want to be. If you want to know it early, then we will go to the middle of the zone. If you are like, well, I want to give it a little more space and I want to make sure it's super extended, this is if you got FOMO. If you're a FOMOer like me, I'm going to measure right here to the middle. But on occasion, again, depending on what the market is currently doing, I'm going to measure it to the top of that region. Now, this one had a nice, juicy, obvious red cross in the middle of it. So I went ahead and put it to the middle for the one that I'm currently working on when we come out of the screen share here in just a moment. But I am looking for the measurement from here to here, which is going to give me the extension projection double move to this zone up here, which is going to become our take profit zone, where I believe that as they push this through low volume, everybody thinks, oh, it's going to go through high volume. No, it doesn't. No, they want to move it through low volume quickly up into this space up here, and then they want to start selling those off so that they can take them in profits because they bought down here. They need to sell them to somebody. Well, they got to get everybody hyperactive and make it look really long so that they can hand this off to somebody, and they need more buyers up here when they come to sell. Remember, they need to sell into size. So they got 1,000 that they got to get off their plate, and they need to make money on it. They need to run it from inside this zone where they bought. Well, they bought 1,000 here. They want to sell it up here. So how do they get it up there? Remember, the whole game is make somebody believe something is going to happen and make sure that they're wrong. You need to get them to believe they're right. So they want to sell up here. So that's what I call I want to draw on the take profit zone. And generally, they want to move that in a double move, right? If it costs them this amount of space to fill their coffers, they need that same amount of space. They want to make that, right? So if this was 100 ticks, then they want to run it up 100 ticks before they start selling it off. So what I want to do then is look for, once I've drawn in, identified the defense leg, now the rest of the day, pretty much, until I see the opposing 1K. So this is the whole alpha omega concept. Okay? So the beginning and the ending. So the beginning of this has become here. So what's the ending? We want to look for the ending, the matching where they've sold off, where they have released their contracts. So I want to see 1K up here. Does it mean that it has to come all in one thing? No. In fact, it'll be hidden up here, right? It'll come in little batches. They'll be batch exiting those plays. But when it adds up to 1K, okay, it might be over. That's the idea. But this is one of those where I've got this big play opportunity oftentimes, or small plays. I don't have to, hit home runs. I can hit, base hits in here, or once it's hit in here a couple times and we start to move up and out, this might be the big move where I can hold on, build a position, and have some massive play between where the big guys, basically you're running with the big guys. When retail experiences pain inside of this defense leg, that's when you know the best play is going to come. When they have experienced that pain and suffering, which means literally bear trap, right? You're looking for bear traps in this case with the green side and the opposite, or a bull trap on the other side. But it starts with that 1K leg. Now, to get the retail to take their money out of their pockets, they've got to convince them. So they will believe that they're right on the short side. And when they believe they're right, that's when they're right.
Download your free trial at AlgoBoxPro.com.